is no point carrying on if the business is fundamentally unsound. But I think my business wasn't, and I think I've proved that. So it was a business model that was successful, and I never for a minute thought that I would give it up.
For joining me, Robert. As you know, I'm speaking to directors of failed or distressed businesses just to understand some of the mental health and emotional toll it's taken on them and around them, and what resilience they've brought up. And a bit of personal reflection after 30 years of, I probably haven't considered this the human impact in enough depth. But what I'd like to do initially is just ask you to introduce yourself, and maybe a little bit as well about the case that we dealt with.
Okay, so my name is Robert Stell. My company is Bradbury Stell, and we're a firm of chartered certified accountants. The firm now turns over pretty much bang on $1 million. Andrew and I met, as it were, 11, 12 years ago, when the company got into difficulty. The background to that was around RTI. Now, everybody knows RTI, which is the monthly filing of payroll, and takes it for granted. But in fact, 13 years ago, it was different. And you would file once a year. And certainly RTI was not something that HMRC suddenly announced and implemented the next week. There was plenty of time before RTI came in. But what happened with RTI is that there was a concertina effect. All the money that my firm owed HMRC, PAYE. So they wanted all the arrears and the current month all at once. So that was just untenable. And so I got in touch with Andrew at ICS.
You've been in the position that thousands and thousands of business owners are in right now, that for some reason, with this inertia, head sticking in the sand, or reluctance to do something about it. So can you perhaps reflect on your mindset then, on also now the benefit of hindsight, perhaps again give some advice for business owners?
Well, I think a lot of the people who are suffering now are suffering because of an existential event. They certainly didn't ask for COVID. They didn't ask for Putin to walk into Ukraine. And, you know, Brexit didn't help. So we've been through an awful, awful time. The view I took, rather maybe pugnaciously, was it's HMRC's fault for, in my case, for not coming to some reasonable agreement. Taking that attitude in a way helped me and my mental approach, because it enabled me to identify an enemy, which pushed out it pushed out too much introspection, put it that way.
Mm-hmm. Robin, you've obviously recognised, as you know, you've identified an enemy in this very specific technical issue in terms of your particular case, but it still went through a very difficult process, and you had staff, as you got friends, family, clients. How did you manage those relationships? Who did you shield the true facts from, and then how did you communicate some of those really difficult decisions with some of the key stakeholders?
Okay, what was interesting about the whole process was that of all the clients that I had, and even then it was 300 to 400 or something like that, only one spotted it, because obviously there's an entry in company's house. The staff, well, they had to know. And the fear is, right, they're all going to walk out. There wasn't anything. It's not like that. It was well, we just crack on. We just will operate as normal. We didn't move offices. We moved banks, obviously, and we had to change our name, which was a little awkward because we had to get registered with HMRC as an agent in another name. But that was surprisingly easy, and we didn't lose any clients.
Do you think that understanding of HMRC as a known entity and why they did what they did gave you a bit more confidence and reassurance that going forward you'd escape relatively unscathed?
Yes, because they are an unfeeling institution, and blind to a certain extent, and they certainly don't hold any long-term grudges because they can't. So, which is entirely different to maybe letting down a major supplier. If you were in the catering industry or construction, and if you'd let down a major supplier, that could have a massive impact on your ability to trade in the future because it's going to affect your reputation.
Mm-hmm.
But falling out with HMRC isn't going to affect anybody's reputation. They are a sort of blunt instrument, and I certainly don't hold any grudge against them. I mean, that would be daft.
What's your view on people's attitude to failure? And do you consider yourself at any stage a failed businessman or a businessman that happens to have had a business failure?
Definitely the latter, a businessman that happened to have a business failure. And it's a business failure that I recovered from. It is not a personal bankruptcy. But I have clients of mine who have been made personally bankrupt and have bounced back very, very quickly. In America, it's almost a badge of honor. There's no sense of shame at all. It's just makes for a good story. I mean, I'm not just saying this, but I think you and you guys at ICS handled my case sympathetically. But I've got a client at the moment whose business disappeared in COVID, and so he's gone for a CVL. Again, it's HMRC, corporation tax and VAT, and the insolvency practitioners that are dealing with that are very, very aggressive and using language that would most definitely adversely affect someone's mental health. And I am sort of like helping the client maintain their mental rigor, if you like. I've had a few conversations with this client where they're, close to tears. Sort of, I've just had this letter from these people, and very, very aggressive language, and accusing them basically of thieving the company's money when it was entirely to do with COVID. I don't know. I found it strange, the sort of complete lack of sympathy and empathy.
Just in terms of, you mentioned a couple of clients that have bounced back. That can be down to their personality, the circumstances of the case. Do you feel that you yourself built up more resilience? I mean, you sound very very much that sort of character anyway. But what have you gained positively from the experience you went through?
Well, I think what I gained positively was that I recognized there were certain areas that I wasn't administering successfully. And, I definitely learned that paying HMRC on time was a good idea. Yeah, in all business is risk. but it has to be managed risk. And I think that I'd taken a little bit too much risk, and got caught out when HMRC changed the rules. But that's life, you've got to be prepared for that. So I think there are little things that I learned, building up a cash reserve and administering certain things differently, like credit control.
And have you passed any of these experiences on to clients? You might not have, you might not, in the context of what you went through, explain to them, but have you felt that some clients have benefited from your experience now?
Yeah, I mean, I would definitely hope so. Yes, having gone through the whole experience, and I know what it means and what can happen. I haven't had since too many CVLs. I've had a few, so maybe 3 or 4. Lots of MVLs, but very few CVLs. But yeah. So yes, I've been able to advise clients on either coming to agreement with debts, about handling HMRC. Really, no one cares. Seriously. Largely, you think people are going to care? You think people are going to look at you in the street? It doesn't happen. It really doesn't, and you can crack on and recover very, very quickly.
Keep calm and carry on.
Yeah. It's just not the awful thing that you think it's going to be. It really is.
Yeah. That is a key message, isn't it? It's a fear of the unknown, fear of the worst. You were faced with, I mean, obviously you've run your own professional practice for a number of years, and faced with some quite difficult correspondence, discussions, and other communication following insolvency. And a lot of that relates to fundamental housekeeping, directors' duties, the Companies Act, the Insolvency Act, Disqualification Act. There's a significant barrage of statutes that sometimes directors never knew existed, but are then judged to have, or that they ought to have known that when they set up. Do you think that it's too easy to incorporate and become a director? And how do you think that education in the business community generally can be improved?
Well, obviously, had I been disqualified as a director, that would have had massive implications for me. But fortunately, that was never going to happen. I certainly wasn't doing anything that would merit disqualification.
But Robert, so just on that one, this is Disqualification Act is something that directors probably have got no knowledge of until and unless they might have one failure. So do you think there's an awareness piece there?
Absolutely. Disqualification as a director could have major implications to you. Should directors be educated before they become a director? For sure. Even if it was just a webinar that they had to attend, like a CPD, I think that would be good and positive, and probably not that expensive. But yeah, there definitely needs to be more education of directors.
Yeah, and I think there probably are any number of initiatives, different qualifications that whether it's the government or local authorities or various institutions do push, and banks will have guides, but fundamentally, the entrepreneur wants to get on and run the business, wants someone else to deal with all that, and so therefore, where do you think the role of perhaps accountants as business advisors rather than year-end accountants and non-execs, how do you think they can help with governance?
With governance, well, I think us in the profession have a big part to play in explaining what incorporation means, what the advantages of incorporation are, and what the downsides of incorporation are. I think that's fairly standard. All practice accountants would do that, or should do that.
Even if it's once a year, every 6 months, just a conversation, between the accountant and the client, saying, look, you in terms of governance, you can bring people in, but don't ever let it get on top of you, because things can snowball very, very quickly. Obviously, as you found out. In terms of the resilience and the mental toughness required to run a business, the reason I'm doing this podcast is I don't think our profession has done enough. We're not mental health professionals, we're not counsellors, but we do need to reflect on the language and the timing of our communication. And I also think that's relevant for banks, it's relevant for HMRC. It's difficult running a business. Nobody generally goes out there not wanting to pay somebody.
So what I'm going to compare it to is the probate process. So we are probate practitioners, and we deal primarily with the executors of an estate. And quite often the executors are the children of the deceased. And during that first 6 months, which is when you'd hope to get most of the work done on the estate, you're dealing with someone who's grieving. And 6 months prior, and another year later, they are going to be in a much stronger mental position. But you're dealing with someone, and you're asking details from them and asking them to do various things at a time when they are in grief, when they're not thinking at their best. Their emotions are all over the place. Similarly, with a business that's just appointed an insolvency practitioner, it is a little bit like grief. The business is about to die or has died, and the insolvency practitioner is going to help you through that process. And it's very, very important that people are wary about the language they use with someone who is effectively in grief.
It's very interesting you comparing this to the work you do in probate, because, and this is to do kind of contingency or succession planning. And I've hastened out the case where there's been a death of a key person in the business, and there is literally nobody else that understands how that business works. And so I'd be interested to get your thoughts on the kind of lack of general preparedness for an event like that. You mentioned COVID in Ukraine, etc., but the death of the MD or the major shareholder, whatever, is as unforeseen and catastrophic.
Yeah, but there are things that businesses can do. Keyman Insurance, for instance. I'll briefly tell you this story. So there's a couple of young lads in their 20s that I knew. This is 20 years ago, 2004 being the key date over Christmas and Boxing Day 2004. One did the selling, one did the programming. The salesman knew nothing about what the programmer did. The programmer went surfing in Thailand. Tsunami, he didn't come back. So the salesman there, he's basically got no business anymore, because without the programmer, forget it. But they had Keyman Insurance and they cashed it in, and he came away with 100K. So that there are certain things that you can put in place that are going to help you get through that.
And that provides some financial relief. But if the spirit and creativity and kind of and the ambition came from the individual that's lost, then it's difficult to replicate that.
It is, and I may well be guilty of that myself. Although we're accountants, we're not film directors, so the creative aspect is not that great. But yeah, succession. I think you're talking around succession and succession in the event of should be part of good business practice. It's difficult though. It's difficult. You may identify an individual that might take over from you, but that they might not be prepared. In accountancy, we have to nominate a firm who will step in, and I am fortunate in that the chap that signs off our audits, he runs his own practice, similar age to me, and he would be the one who would step in. So I think my clients will be well looked after.
And do you think that disaster planning and being prepared for something, the worst, when it does happen, that must reduce stress? That must be something that will assist somebody's mental health during a crisis like insolvency, do you think?
Yeah. It is something as human beings we don't do. It's like will writing. We never get round to it because it means that we're going to have to acknowledge our own death. But as soon as we've done it, we all feel much better about it. And I think disaster recovery plans are, along the same lines. I think it should be woven into all good governance of businesses, like monthly financial reporting. It should sit alongside that, really.
I think a lot of people see accountants as a necessary evil in terms of an overhead. And do you think accountants, some say they do this, but they ought to be more of an advisor, maybe an external FD, or even just a shoulder to cry on?
Definitely
than they already are.
Yeah, definitely the latter. It's a key part. I think the relationship with the client is that you're a key business advisor, and I would like to think that if any of my clients were in financial trouble, that they would come to me first. I have remonstrated with some in the past for not doing so. And many of them I've known for years and years and years. But yeah, I think they would come to me first port of call with business problems as well as business opportunities. Both of those things.
Yeah.
And as a sounding board.
And an accountant said to me recently that he'd taken a new client, and he just said, "How's it going? What your plans the next 2 or 3 years?" And he was surprised that it hadn't been asked that before, which I found quite surprising. So do you think that some clients perhaps are just maybe taken for granted, just seen as a commodity, and the accountant might be guilty really of just that extra level of care that the business owner really appreciates? It doesn't cost anything, but it goes a long way.
Yeah, I think sometimes it's a little bit of the fact that we're British and we don't want to be poking our nose in when we haven't been invited to poke our nose in. But clearly, by preparing someone's financial statements, I know all about what my client's up to, but I only know what they have been up to, because if we're preparing them 7-8 months after the year end, a lot of things could happen. We'd be unaware of that, completely unaware. I asked the clients, I said, "How are you? How are you getting on?" And everybody says the same thing. "Oh, I'm fine." And I laughed and I said, "No, you're not, because you can't be. You'd be literally insane to be fine during all of this." But we just do it, don't we? It's the British response. "Oh yeah, I'm fine." "No, you're not. Come on, talk to me." And I had to do a lot of that for 1 or 2 years, actually. Not just COVID, but the next year when, although COVID was getting better, the business problems were getting worse in many ways.
How did you keep everyone's spirits up? Because I guess you were in the dark as everybody else, and accountants had an unbelievably difficult and often kind of underpaid task, with managing furlough and dealing with COVID loans and what have you. How did you manage that? What was your message?
I think actually I was, shall I describe it as being unreasonably positive, geeing everybody up a lot of the time. We put out broadcast messages on our newsletter. Things are going to get better, and then they didn't. They got worse, and then they got better. So yeah, I mean, I was sort of relentlessly positive about the fact that we'll turn this around. But I had to talk a few off the ledge for sure. There were a few moments when some clients were, I'm going to pack this in. I'm done with all this, and I'd be going, no, come on, let's just look at the fundamentals, and the normal that we're going to get back to. Remember that.
We've covered a lot of ground. Really appreciated that. And I always ask this question, given as the name of the podcast. What have been the toughest decisions you've made?
The toughest decisions I've made. And they're usually around getting rid of employees, to be honest. They're always tough conversations. Nothing else really that comes close to that.